Good afternoon, everybody, and welcome to this edition for Us the Experts. 10th of May, pretty tough day out there on the markets. It is a sea of red, and hopefully you've managed to avoid most of the carnage. If you haven't, hopefully we'll be able to shed some light on some of the stocks in your portfolio. First one is for Gunnars, and he has asked for CarnivalCorporation, which is a US-based stock. You can see they're trading on the New York Stock Exchange. Carnival Corp, it's one of those big cruise line operators, and I might just actually zoom out or just go to the weekly chart here because you get to see what happened during the COVID crisis. And you see there early 2020, basically Carnival falling off a cliff, unfortunately, and has experienced some recovery since then. I won't go into the fundamentals on this one because, to be honest, I don't know them that well apart from knowing what it does. I'm going to focus more on the chart because I think, to be fair, the chart is telling us what the demand and the supply, or the balance and imbalance of those two factors are in the markets. And I think this is a picture of excess supply at the moment. That's the weekly chart. Important to note also that the moving averages that I use work really well here on weekly charts. You can see that the short-term trend, quote unquote short-term because we are on a weekly chart, still impeding prices, still getting itself in the right spot in terms of telling you what the trend is and where prices are going to be dynamically supported. And then you've got that long-term trend, clearly to the downside as well. If I switch to the daily chart, it doesn't get any better, unfortunately. In fact, it's taken out a key level there at $15 and doesn't look like there's a lot of support underneath. So look, for me personally, if I had that, in fact, I wouldn't have it, obviously, because it goes against everything I stand for as a trend follower. If I didn't have it, I wouldn't be looking to buy it at this stage. So sorry, Gunnars, I wish I had better news for you on that one. So let's kick off here with AZL for Jackson. One of those high-flying lithium companies. Well, they were high-flying anyway, now not so much. In terms of the trend, we can see short-term trend clearly changed the downside. Long-term trend is still holding. Today's price action is looking good. I mean, we're seeing some demand come in a pretty terrible market down at that long-term trend, so some buying off that level is encouraging. A little bit of volume there, certainly elevated over the last few sessions, but nothing like we saw through here. So it would be good to see a bit more volume come in to tell us that demand is coming into the system, and the sellers are kind of washing out of this one. So people who unfortunately got caught in this one up at those high levels when it was the hottest thing on the market are washing out. We're seeing some long-term buyers, some stronger hands coming in. There were some pretty strong sell signals, to be fair, in these candles before that, but look, I can understand why you might have given it a chance. But on the basis of the candle today, I think there's just enough in there to hold it if you've got it. If you don't have it, then, for obvious reasons, it's hard to call it a buy at this stage. What would change it to a buy? Well, it's all going to be about the candles from here, isn't it? We want to see more white candles come in. So obviously today is a good start. Lower shadows are always welcome as well. So you could even see a candle maybe that looked a little bit more like that. That would be just as good. It indicates that there's this latent demand working in the system. And if you saw a candle that good, honestly, that good would probably be sufficient in terms of demand to tell you to put a little bit of risk money on the line. That's up to you, of course. And if you're a bit more conservative, you might well wait for another confirmation that might look like something like this. Or if you're a little bit more conservative again, you'd be waiting for the price action to potentially pull back just once into that zone somewhere. So a little peak trough combination, and then on the move back through whatever that peak might be, that would be a really nice price action signal as well. And what that would be telling you is that you are now starting to see the signs of, buy the dip, of accumulation, increasing demand in the system. Unfortunately, the evidence we've got at the moment is just increasing supply. Okay, so we need to see that turn around. So a few supply candles being highlighted there. Okay, so where we are, maybe where we could be. I need to give you that other scenario of what would make this worse. Well, I wouldn't want to see us close beneath where the demand is coming in today. So that low there is 12.5. If it did close below 12.5, then really I can't see any reason at all to continue to keep the faith. Next one for Jackson again is Sayona Mining, pretty similar, so I can probably do this pretty quickly. Really encouraging signs of demand in the system today. Now this is still a live candle, so the one I'm talking about is here. So this is the candle I'm talking about. Today's candle, you would need to see it close near those highs. We'd love to see, again, elevated volume to tell us some of that panic supply is out of the market and the stronger hands are coming in. That would be wonderful. Ditto on all of the price action signals you'd want to see from AZL, transferring it to SYA before you would get in, both in terms of the aggressive case and the conservative case. Otherwise, I can see enough there to hold it on the basis of today's candle, but not enough to buy it. Next on the list, CXOs. We're going for the full house here of lithium. lithium stocks. I can't see anything significantly different here in the analysis. Really encouraging candle today. But again, we need to see where it closes. We need to see a lot more going on in terms of is this demand point happening at a area where we would expect it to occur? Well, there's a little potential demand point here from that previous peak. We're also at the round number of $1. So these things are helping out. There's probably the next point down here, which might well even coincide with the long-term uptrend zone as that continues to move higher. So once again, enough in it to call it a hold, definitely not enough in it to call it a buy. And I know this is all hindsight stuff, but it is worth just highlighting when we get to such clear signals that you need to be looking out for signs of supply in the market. And I'm talking about large black candles and or a combination of large black candles and upper shadows. And then, and we were very clear on discussing this when we got the chance, and it might have been somewhere around here. I'm going to suggest we were talking about it somewhere around there. We said watch out for when you get that supply signal, then you get the rally and you get another supply signal lower down, because it just indicates that we have building supply in the system. So might not help you if you're watching me for the first time and you didn't catch that warning a few weeks ago, but hopefully it helps you the next time around in terms of understanding what the end of a short-term uptrend looks like. And then in fact we actually had another little signal here which gave you all the reason to get out, and if you're using our model that we like to talk about here, where we exit in thirds, there was plenty of warning here to kind of go, well, call lithium as good as it you kind of look on paper. I can see that the market is losing a bit of patience with you, and then really I think on the break beneath that little support line there, or didn't act as support, did it? That was your clear signal to exit. Okay, final one for Jackson is AVL, and I would say comparing to some of the other ones, obviously you can see, hopefully I've tuned your eye into what some of those supply signals are. Clearly supply signals through there, but in terms of AVL compared to some of the other ones, we're not seeing as big a demand response here in today's candle. So this is probably my least preferred out of the ones we've discussed. If there is a little saving grace, it is that we are potentially back to a bit of a demand point here. So not a terrible candle today at all. We've got a lower shadow, it's white. Maybe there's a little bit of extra volume there going to develop because this candle is still open. But yeah, we'd like to see a better response. We might well see that today. So if you get a close maybe towards that 6 level, you would certainly put it in the same basket as the other ones. For all of them now, I think we talked about the price action you want to see, but it's also worth mentioning pressure points where things could go wrong as well. So if we saw some price action that kind of looked like this, and some really bearish candles in and around this short-term trend zone, that would be telling us that we're not going to get this V-shaped rally. We're probably in a more sustained period of distribution. In that case, fortunately, these shiny new things aren't so shiny anymore, and you could be in for the long haul. Alkane, and I wish I had better news again on some of these, but we can see some pretty strong supply signals. That one's fine. I wouldn't sell on that. That one would get me really concerned. That one would get me really concerned. And then I think if you drew a little line under that point there, which coincides with the demand coming from this candle and this candle, and where that candle stopped its sell-off at the end of the session, really, I can't see any reason why you would hold your entire position beneath that point. So for me, that would be the minus 1/3. Clear cut, absolute, no doubt about it. I would be selling a third of the position, but you might say, well, Carl, that means you've held on to 2/3 for this huge decline. I would say, yeah, well, that's just part and parcel of how the system works. Unfortunately, you do sometimes hold on, but at least you would have taken some nice profits there at 120. Your next signal, well, the gap here is really concerning. So anytime you get that gap on the chart and then the close on the low, so that would be another reason there potentially to minus 1/3. And I know this is all hindsight stuff, but really it's about tuning your eye into price action patterns for next time. Okay, so I'm happy to take these questions every Tuesday, of course, and I would have told you the same thing back then. Then I start to become concerned by these shadows here. Look at this shadow, and this shadow here. But still, even then, probably only here would be the final third. And you can see that if you're going to use a methodology of exiting in thirds, then there is the potential that it can backfire on you a little bit, because if you just exited all on that first third, I'm sure you would have done much better than potentially even exiting your final third this morning and being out of the company as of now. So where it works for you is on the way up, where you get sort of these intermediate signals to sell. None of them look really terrible to me, to be honest. And then the stock keeps going up, and that's for me. I feel worse when my stock continues to skyrocket than maybe giving back a little bit here. So hopefully that one is well covered for you there. Kaiser is the handle. So you can see we've got Thomson Reuters is the company, Refinitiv Icon is the product, and what this does is give us the broker consensus. Don't have a great deal of broker consensus for Alkane. We've really only got 2 brokers there. They're both at a strong buy for whatever it's worth, and they've got a price target of 132, which allows for about 37% upside. I can't say whether that's the same price. Sometimes that's a little bit delayed, but I'm sure you'll know better than me. But we can see that Alkane certainly does have some profits. We can see earnings per share here. We can see that we've had some nice earnings per share growth since 2020. Not expected to continue, unfortunately, with a decline there in 2023 before a very slow bounce back, and only getting over this year's earnings by 2025. Again, a small sample size of just the 2 brokers. When the numbers are as volatile as this, -22, -29, -6, +76, I tend to take those with a pinch of salt. Certainly raise the risk level there a little bit. That does bring down my estimates of fair value to about 131, which is actually pure coincidence, smack bang on the brokers. That is predicated, of course, on having a reasonable comparison, and I would suggest to you that 17 is probably a little bit high on that one. I think, given what the market's sort of going for, maybe a 15 even is a more appropriate PE target. Still some upside there, about 20% or so at a 115 target. So look, for all intents and purposes, both the broker's fundamentals and my fundamentals indicating that Alkane is starting to look pretty cheap, certainly around these levels here at 95 cents. Okay, so this one's from Gary. It's actually a really interesting question. Do you have a specific time of the day when you buy and sell your shares? It's actually a brilliant question. So, and Alkane is the perfect example. So there's a couple of ways you can do it based upon my methodology, because my methodology is very much waiting till the end of the candle before you act. So at the moment we look at Alkane, so let's just say hypothetically you're looking at that and saying, well, I want to buy. You're looking to trade potentially in the last sort of 15 minutes of that candle, because at least you're getting a decent amount of certainty that the candle is real and that's where it's going to close. I do potentially sometimes trade in the closing price auction, so that's right at the end of the day in those trades that go through at the end, and I'm looking to just acquire at the market price as best I can, because I'm effectively trading at the end of that candle if I see a signal. Now, if we sort of flip it around, we saw this candle here where I said at the end of that candle you would have had a very clear-cut signal, unequivocal, that it's time to execute an exit, whether that's your first third or final third, I can't say. And in that case, again, you're looking to trade towards the end of the day, or if you miss that, then potentially you're looking to exit on the open of trading the next session. So 2 times around the close of the candle, if that suits you best, or if you can't make it, then around the open of the next candle. Michael is saying, just want to say thank you for your expert knowledge. Appreciate that, Michael. I wish I could be giving us all better news at the moment. Unfortunately, I can't control the prices or the charts. I can't make them do what I want to do. I can only analyze them ex post. Doug saying, based upon the past, the turn, the recovery, whenever that might be, will we see a creeping sideways market, or will it be a more pronounced bounce? That is the $1 million question from Doug. Thank you for giving me such a curly one. You're basically saying, where are we going from here? We are going to get an update coming through in about 2 minutes, and that will be very interesting. This is the S&P ASX 200. You can see that potentially that 69.59 level, which I've pegged for a while, to be fair, is showing a little bit of demand there. We are actually seeing a little bit of buying coming off that level. So as this shadow progresses, hopefully for us up and up and up and up during the day, it is indicating more and more that there is actually demand at this level. So it's one thing for me to predict and peg a level as demand, but I don't actually know until we get there. So I'm going to say, look, this is a potential level of demand. The market will tell us if it is or it isn't. So long story short, today is the first step in a process of finding where the demand is. is the demand here in actual fact? And we have to wait for the candles. What candles? White candles, lower shadows. If we don't get that, if this candle ends up being a big black candle closing on the lows and closing beneath that level, then that demand isn't there yet. We saw a little bit of demand, but the demand wasn't sufficient to accommodate the excess of supply in the market, the panic from the sellers. Now, I'm feeling a little bit because, not to waste time, but to hopefully get this update come through. It comes through at 20 past the hour each hour. My intraday update. You can see that little movement just above the top of the box there. So a little bit more demand coming in. If we fail here, then you start to look at these levels. So that's the way I would suggest you track forward. We're waiting to see where that demand comes in, and until it comes in, there's really no point trying to call a bottom. Now, the second part, I think, of the question is, okay, are we more likely to see a V-shaped recovery, or we might more likely to see a really sideways grind, potentially before another move down, or potentially before we do get back to those highs? Well, after we're waiting for this initial sign of, well, where's the demand, question mark, we then start to look up to areas of potential supply. So, somewhere around here, it would be an obvious point. So it's that 72.33 area, 7200, because the dark green zone, well, it was dark green, now it's orange. So the long-term trend zone, which we know has this fantastic history of supporting prices, but unfortunately also at times resisting prices, we want to see how we respond there. So again, we're looking for the candles. A bunch of white candles there tells us there's nothing to worry about. In fact, the market is very brave in the face of this potential supply, and that would be a wonderful thing. If we saw a bunch of black candles appear here in the not too distant future, then that would tell us that really we're just seeing a rally in what is potentially a developing bear market. So I can't give you probably any more than that. Unfortunately, technical analysis, or my style of technical analysis, is very much waiting and seeing for what signs the market gives us, and then basing our assumptions on that. It would be great if we weren't in a sideways market, which is ultimately what we have had for since August last year. It'd be great if we were in a trending market, because then things get so much easier, but we're not. So we have to be really attentive to what the market is telling us. Next one is G6M for Barry. So let's head back over here, G6M, which looks wonderful. So thanks for that, Barry, because I was getting a little bit depressed there about the way things were going, but this is a really nice chart. We're seeing elevated volume through here. I know it looks a little bit skewed because this huge volume bar here is making everything go a bit wacko. But if I zoom in a little bit, we can see, significantly elevated volume compared to the recent past. Great candle if we can close there today, and that's the big if. We need to see if that's going to occur. We are seeing the price, after it has moved above the long-term trend zone, actually come back, hold that nicely on today's candle, and it all looks really good. I can't really fault this too much. Maybe I could say it's a little bit frustrating that these candles are really sort of, concerted efforts in terms of the bears. But otherwise, if we close here, we've taken out a lot of the supply. And you've got to remember that a lot of that supply there is just from the people who are really sort of dead wood. So they kind of look at this opportunity as it's just too good to be true for them. They've been suffering for so long. As soon as the price stops going up, as soon as it starts to go down, they wash out. What we're seeing here is, I've talked about it before, this idea of longer term holders, the stronger hands, the people who know the story better, sort of absorbing that supply, and then we're seeing that changing of the guard. So a lot of people out, a lot of people in, but we're seeing, I think, the stronger hands coming in at those lower prices and buying the dip. So I like this one. I personally would be happy to buy this one based upon a close at or around the highs of today's candle. So I think you've hit a really good one there, Barry, so thank you for that. Oh, okay, so Barry reminding me it was on Four Corners last night, Group 6 Metals. I caught the last sort of 3/4 of it. Maybe it was in the first quarter I didn't get to see, but that could have something to do with it. So it must be one of those critical minerals companies. From Terry, hey Carl, what a market, 3 exclamation marks, I agree. Your thoughts on AX1, which is the footwear company, and Domino's. We know what Domino's does. Now, I wish I had something nice to say about Alkane Group. I'm going to go back to my default zoom. It's really important you do that. So yes, by all means, zoom in and get the finer detail. We had to get the finer detail to understand the volume on that last one, G6M. But it's important when you get to your next chart, you have to zoom back out. So you're looking at charts on a consistent basis. But my point is, if you have zoomed in on something, and then you look at AAC and you start to continue your scan, you're not looking at everything on a like-for-like basis. You're not getting that big long-term trend, and that is going to be detrimental to your ability to identify the best opportunities on a like-for-like basis. So zoom back out after you zoom in. I was talking about AX1 for Terry, and I did zoom out. I didn't see anything I liked. And another quick way to zoom out from your normal zoom, your default zoom, is to just go hit the weekly, and straight away you're presented with where those key points of demand from the past might be if they're off screen. So potentially there's one there. I wouldn't say it's a really, really strong one, but we did see demand shown at that level from the past. If we zoom back in, we can see potentially that demand is manifesting itself in the market today with a lower shadow and a white body. However, one candle does not a reversal make, and it is a very clear short-term downtrend, a very clear long-term downtrend. The momentum of the downside is extreme, so it cannot be a buy for me. Is it a hold? Honestly, I can't see enough in it to hold it, even on the basis of that demand level there. I'll let you decide if you've got more confidence in that demand level than I do. What would have to occur to turn this into a buy? Well, we talked before about the candles we want to see. We talked before about the price action we want to see, but I could not even contemplate buying this until we started to see signs of excess demand in the system, of sort of, buy the dip activity of rising, increasing demand, potentially even some volume, to tell us that a big fund manager has seen the value here and is coming to buy and clearing out some of the dead wood that is created by these declines. So were there people that bought the stock there? Yes, there were people that bought the stock there. How do I know? Well, price rallied for a few days from there. Were those people really disappointed a few weeks later? Of course they were. They were devastated because they thought something was cheap, and clearly it got a lot cheaper. So for them, this level now represents a potential break-even point. Maybe even they're getting stopped out down here. So we need to trade with them, and that's what volume's going to do. Geez, a big pass for me on that one. Sorry, Terry. Domino's. Let's hope we get better news here. Looks pretty much the same. Again, I'm just going to go weekly chart here very quickly, and that gives me the ability to go back and find another pretty key area of potential demand. So old points of supply. How do I know it was a point of supply? Well, the price fell from there quite sharply. They tend to act as points of demand in the future. Let's zoom back in. It's a little bit off screen. That's not a problem because I can bring that back on screen. There we go. And move that there. So again, no surprise that we're seeing a few little white candles here in what is actually a pretty terrible market. I think this is much better than Accent, as in I would be closer to a hold on this one. So whereas Accent, I'm struggling to find a reason to hold it. I think Domino's, if you're still in it, there's reason to hold it. Hey, if you're still in it, you probably should have observed about 100 different major supply side signals to get out before this. That's hindsight. You didn't know at the time, now you do. You'll know for next time. But I like these. These are actually pretty positive down here. Again, I would need to see some movement to here, and after a pullback, a higher trough being set, and then a move through that level. Why is that level in particular of importance? Because we have seen some demand in there in the past. So this old point of demand, it's the opposite now. The old point of demand works as a potential point of supply in the past. And the reason for that, we've discussed many times, is that was there buying here? You have to ask yourself, was there buying here? And the answer to that is yes, there was buying here. How do you know? Because the price went up for a month really from that level. This is all break even to them. All of this area is break even to them after they've been disappointed by the price falling. So it is a chance for them to potentially supply into the system. Okay, and I can only get confidence that we have eclipsed that supply if we've traded with it, both through an increase in volume and that we are now trading above those levels. So it would take a bunch of white candles, lower shadows and higher peaks and higher troughs before I could get there on Domino's. And the reason why we take this course of action is, you might say, Carl, Domino's is just a fantastic company. It's got great earnings. It's got a low PE or whatever it is, it's blue chip, can't go wrong, long term, it'll be up, right? Sure, I get all those things, but before it does go back up, we might find that it hits $50 first, okay? So I'm prepared to let it get to say 80 and buy it at 80 on the basis of all of these wonderful things, right? To mitigate the risk that if I get in at 70, it goes to 50. Okay, I just think I've got a higher probability of success. And if it does go back up, look, hey, long term, it'd probably go back up to those highs at some stage. Maybe, I don't know. But 80 to 160 is still a pretty good swing for me compared to, taking the risk and getting in here at, 66 and trying to get to 160, because the risk is that I can maybe pick it up at 50 or 40 or 30 somewhere down the track. And you're going to tell me, no, Carl, there's no way Domino's can get to 30. And if it does, it would be a major bargain buy. Well, do you really want to be hanging on all that time to find out? There's enough to hold it, not enough to buy it. I've told you what you need to see to get a result. In terms of selling it, okay, and maybe we should talk about that as well. If we see a close beneath that level, this is where the demand is coming in. If we close beneath that level, that demand is gone. It's been satisfied in the market. That low there, 64.82. So close below 64.82, I'm starting to get really concerned about another leg down for Domino's. This one's for King. King has got, what has he got here? EDV, which is looking pretty good. No complaints about that one. It just, it's one of those defensive stocks. Candles are good, trends are good. Doesn't have a long-term trend yet, just hasn't been around long enough. But there's nothing really sinister in there to tell us to manage our exit at this stage. You might look at this one and go, well, Carl, that one makes me a bit cranky and a bit nervous. And then I say, look, one candle does not a reversal make. So you would look at that candle and it would get your attention. No doubt, you've got to see how we trade from there. But once we saw this and then this, I'm pretty happy that one day is more of an aberration. Look, are we seeing screaming demand side candles since then? Through here, not screaming demand, but there's enough demand in there in what is otherwise a terrible market to tell me that people are holding on to this. They're not rushing out of this. They're not panicked about this. They're pretty calm about this. And actually, there's enough demand in the system to accommodate the bit of supply that might be out there because the market's a bit terrible at the moment. So all I can see there is hold, hold, hold. I can't see any reason to manage your exit at this stage. King. Next one is for Emma, AD8. The chart looks unfortunately pretty terrible. And I'm going to go ditto for perhaps AX1. The good news is there is a bit of demand coming in today, and that's encouraging that we're seeing it. There's a lot of stocks we're not seeing it, but with such a well-established short-term downtrend, long-term downtrend to the downside, I can't see a great deal of reason to get excited at the moment. If I zoom out to try and find where previous demand levels are, lo and behold, $5, big round number. How many times have we seen this today? We've hit that W button and we have found a demand point pretty much where we are right now. And to be fair, kind of explaining why we're seeing some of this demand in the short term. So that's really interesting. On that basis, and on the basis of the current candle, or maybe I could squeak out a hold, but you would really want to see this close near the high. So the current high so far is 553. I think you want to see it close at 550 or better. Otherwise, it's not one for me at this stage. What I can do is see if we have any fundamentals for it over here. So let's do AD8, and I might just quickly do Domino's while we're here as well. So we've got AD8 coming up, and my spreadsheet's only going to work if we've got earnings in the system, and we're not going to get any until FY24, so I can't give you a really good fundamental value estimate of that one, Emma, sorry, but I definitely will be able to do Domino's because we've got plenty of earnings on this one. We can see here your EPS lines, and it gives you an idea of sort of where they're at. So obviously we're going pretty well even through COVID, and then we're seeing a little bit of a pullback here, post-COVID bump, but then earnings growth coming back in, and actually at a pretty good clip from here. So that's really encouraging for Domino's. We do have a bunch of brokers covering this one, 14 in fact, 2 strong buys, 5 buys, 6 holds, 1 strong sell. Their price target is massive, let's face it, 96.18 average, which gives you about 42% upside. Now we do need to reset all of these for each stock, so don't panic yet that if you see my model says that it's 42% overvalued. These earning estimates are substantial. I'd almost go moderate because that's a decent clip for earnings. Maybe we'll give them the benefit of the doubt if we go low, because I guess it's a fairly defensive business, isn't it? Now, in terms of the right PE, well, it's not 15. 15 is too low because the market has never paid 15 for Domino's, maybe at the worst part of that COVID crash. So, 30 is a far more sensible PE for Domino's on a historical basis, it's actually very, very low. I think looking forward, I don't think you can go much higher than 30. See what happens when we change this. You can see straight away how much it changes. I don't think I want to go much higher than 30. I think that's probably top end of the range. I think bottom end of the range might be something like a 27 in here, which is still showing that Domino's is undervalued at current prices. And maybe if you split the difference of those two and set like 28.5, you're getting here to starting to look like pretty good value at current prices. Now, that's just a quick sort of finger in the breeze assessment of Domino's, and you can argue all you like that it looks cheap, but certainly the chart, as cheap as it looks, showing that there's an excess of supply in the system. You can't really argue with that. So we can argue all day as to whether those numbers are right, whether Domino's is cheap or expensive, but you cannot argue that there's an excess of supply in the system. And then you have to say, well, why? Why do holders predominantly want to get out, and why are they selling at lower and lower prices, and why are there so few people looking to get in to stave off those declines? Think about that. I might, for completeness, very quickly just do AX1 here, because I know we'll have earnings for this one. So we have 8 estimates there, 1 strong buy, 5 buys, average price target 216. So this is where, brokers on the way up, they ratchet up all of their price targets, and then on the way down, they're very slow to adjust them because that would indicate to the world that they got it completely wrong. So we see these crazy dislocations in their price targets. So don't take too much notice of that. Again, we need to reset things. Look, I can't keep this at low. I just know in terms of rising input costs, inflation, rising interest rates, and in fact, with a 40% average growth rate, that is just crazy. I'm going to go high on this one. The target PE we need to adjust, and 8.8 is just using the median of the brokers. Therefore, we get it at fairly valued at current prices. So I think this is rubbish. This is just silly. I would say AX1 is fairly valued. And if you could make yourself use a benchmark of 10, which is probably not unreasonable, then it's somewhere around sort of 12% undervalued. Split the difference, you're probably saying AX1 is somewhere around fair value to maybe reasonable value at this stage. Okay, I think that's some pretty comprehensive analysis there, so hopefully ticking the boxes for you. Next one is from Chris. He's got ABB. Ouch, that is the daily chart. I was hoping maybe that's the weekly chart, but no, that is a big drop there. Quarterly update. That was not in the chart before that, was it? That has surprised the market big time. Where do we go from here? There's no way you could have picked that on the chart. If using my methodology, 100%, you were tagged by that one. You would have held it for that. I can't see anything here that would have told me that we really have to be panicked and sell out. This was completely out of the blue. However, when you do see that, and the fact that it did close on the low, that's when you do need to take action. And because of the huge trend change, this is where this 1/3 might be a little bit flexible, and you might be saying, well, maybe I have to go more than 1/3, potentially 2/3. And if you're looking to exit a final third now, Chris, here's our problem. So our problem is that you look at how much supply is in the system, and it wasn't supply that was a little confused or unsure. This supply knew what it was doing, okay? And I would suggest to you that even if we did get some sort of bounce here from bargain hunters of $4, that supply, they knew what they're doing. I don't think they're finished, and you'd be watching very closely for the candles in this zone. If we saw a bunch of black candles in this zone, then you would be switching to a final exit if you had gone 2/3 or a subsequent exit. With the final exit, if you're doing the 1/3, potentially on maybe a breakthrough $4, and you'd be completely out. Look, if it does give you the ability to take advantage. If we saw a bunch of white candles there, to hang on a little bit and see and ride it more, maybe even to sort of $5 if that was to occur. So this is the key level now, around about that sort of 435 to 440 level. Watch the candles there, and we are very much forced now. It's unfortunate because often in these sessions it's sort of on our own volition. It's at our discretion that we're managing our exits. Unfortunately, we are now forced, aren't we? We're forced to manage an exit on that one because the trend has changed. Oh, that's not good. We are hopefully going to find some happiness in the charts. of Mincor. I know it's been one of the stronger performers. Unfortunately, not a lot of happiness there. What are the telltale signs of supply here? This is interesting here. So this one gets my attention. I'm going to zoom in here. Remind me to zoom back out. See how this bearish candle has matched the demand candle. So it's not just the fact it's bad, it's the fact that it's happened after the demand candle. So they call them the railway tracks. If you imagine the two candles side by side, so like railway tracks, and where you've got the white and the black, or the black and the white. So it is a really bearish pattern. In fact, when you blend these two candles before and you go for a common open, so let's call that the common open of these two candles. The common low is pretty simple because that's there, and then the common high of the two candles is there. So obviously this high dominates that high. So we're not going to use this high here, we're going to use this one here. And the common close of the two candles is at the close of the second candle. So if you blend these two candles together, you get a candle that opens here, has a low here, has a high here, and a close here. And what that looks like is basically, it's going to be just white, so just white, and it's going to have a really long shadow, about that long. Okay, so that is what that candle looks like when you blend them, and we'll just change those to black and white, and change that one to black, and there you go. So that is those two candles there. And this in itself is a really bearish supply signal. Even if you didn't go the 1/3 here, and I can see why you might give it, have a little bit more faith and give it a little bit more room to move, because let's face it, the trend there was wonderful. The trend there was exemplary. I think that when the supply is confirmed, Chris, here, I think that is your 1/3. Okay, so if you didn't go the first day, I get it. I don't think you can continue to hold with the full position after this candle. Okay, and then how you treat the rest of them. This candle is not great because it's not telling me demand's coming in. We should have seen, you can see how we've responded in the past at this like-green zone. It hasn't happened. That is concerning enough to, actually, I would even go probably 1/3 there, and then your final signal is here, because remember we've said on those lithium stocks, and we call this in advance, well in advance, this idea that when you see this sort of major sell signal, equals major supply in the market, that's one thing. But what you don't want to see now, you don't want to see a building supply from there. That's what you have to watch out for, okay? And I think that this signal here, see how, again, blending those candles, it gets really bad, and how this just took out that demand. It took out the top of that candle, it's back into the zone. The zone's going orange. I just feel that it's really hard to continue to keep the faith after that. So again, I know it's hindsight, I know it's frustrating. Carl, hey, where were you? Why didn't you tell me at the time? Well, I only do ask the experts on Tuesdays, and you got 1 hour, and if you ask me, I can tell you. I don't knock on your door every day, come over to your house, or give you a call, send you a text, which is, hey, is there anything you want me to analyse? But the goal of these 1 hour sessions is to tune your eye into so that you can do it next time. Where does that leave us now? Okay, we're in lower peaks and lower troughs, aren't we? We're not seeing high peaks and high troughs. These two candles here are somewhat encouraging in the way they are constructed. We are seeing potentially some dynamic support coming in from this zone, maybe even also from previous demand points here. And this is probably going to be a key level through here. And we've also got the round number. So there's lots of reasons here why we might see a bounce. So if you are still in it for whatever reason, there is, I think, enough evidence to suggest a hold. Now we go forward. And again, I'm a broken record. You're going to shout at me and say, Carl, mate, you just keep saying the same things over and over again. It's very frustrating. I wish you'd just hurry up. And yes, I've said this today, haven't I? I said, what we have to do now is, if you've missed all those exit signals, is you have to be so attentive here. Okay, this is now the key level. Okay, this is it. If we get here and we see a bunch of white candles, no problems, don't worry about it. Hang on, keep holding. We're going back up to those highs. But if we see all of these black candles come in this area here, you clear-cut signal that the jig is up on this one. It's time to look elsewhere. Okay, so keep an eye on that zone here. Ideally, we hit there with some high peaks and high troughs showing us building demand. That'd be nice as well. White candles, okay. Black candles, not so good. That is Mincor for Hamid. Hopefully that is sufficient analysis for you, Hamid. Next one is Allkem. Wonderful here. I'm going to go ditto. There's nothing else I need to add to this one apart from rewind and replay all of my analysis on Mincor, because they are almost identical charts. So again, one, maybe you didn't go on that one, I get it, but when you see that one and that one and that one, you have to take your cues from the market, understand supply is real in the market and it's hitting a level. And then here, this one is really, really, really nasty. And maybe even, there's no doubt your subsequent exits, but maybe there's a couple even in there. So the key level from here, Hamid, what are we looking at? Well, could be there, probably here. Watch that moving average zone. So around about that $12 level. If we hit this level and we start to see the bearish candles come in, then we're in trouble there. Okay, it could take quite a while for this one to work itself out. For all of these, the price action you want to see, and let's just imagine we're now over here. We want to see the low made. We want to come back down and then go back up, and we want to see this sort of pattern with nice trough peak separation. Remember that trough peak separation? It's been a long time since we've seen trough peak separation, hasn't it? So if you've forgotten, you'll be forgiven from that. Next one is Lake. Thank you, Jill, because I think it's the only lithium stock we haven't covered today. Ditto on the lithium stocks we discussed earlier. So I like the fact that we're seeing this here. We are bouncing off this level. There's a little bit of demand coming in. Volume, actually not too bad. Long-term support zone, all good. And, if you haven't gotten out, and, there were half a dozen signals there to do that. And in fact, this is one we covered a number of times on that basis. There's enough in it to hold it. Maybe Jill is asking whether she's able to now buy it, and that's and hopefully you've actually have taken some profit. Let's not be so morbid and depressed about it, because I know many of you did listen to me and took the cues to sell these things. So let's look at it from the perspective, okay, well, I got out at a really good price now. What do I do with it? How can I get back in? Yes, you can, just not today. I think you need to wait for a little bit more confirmation. I know I talked about it before, but let's see some white candles come in. Let's see some shadows. Let's see a little bit more of this buy the dip being confirmed, that we're making these higher peaks and higher troughs. And it could be a week, it could be 2 weeks of price action, 10 more candles before you get that. But I would suggest you do wait for those for confirmation before trying to pick the bottom, because who knows where this market is going to finish. It's looking really uncertain. Let me show you that. This is looking really uncertain. Now, it looks like still some more to go there. So just be super careful. It's I know we've said, hey, keep cash levels high and just play with risk money, but don't throw risk money at the market for no good reason. Let's reset our zoom back to normal. There we go. And let's have a look at Paladin, also for Jill. Scary stuff here. As much as I do like this company and I like the uranium story, I do have to be very concerned about that. I think it's just hanging in there. We can see that the candle isn't showing nearly anywhere near as much demand as so many other stocks we've seen today. That's concerning in itself. I'll give you some key levels here, Jill, and I'm getting really concerned on a close beneath that level there. So that low is 63.5. Geez, I don't want to see it close beneath that. That would be disappointing. Where is the demand? Well, 60 is probably going to be demand. It's difficult because, unlike a lot of those lithium stocks, we really didn't see a lot of these, clear-cut exit signals in here. There's a lot of just, dare I use the word, crappy little candles that didn't give us a lot of clues as to what to do. So I can understand why you might have held it through that, because I thought it looked fantastic here. So I'm very disappointed with this one as well. Can I get to a hold? I can get to a hold on the basis that we see some demand coming in. Otherwise, it's starting to get into a too hard basket. Kevin, let's have a look at FOD. Looks pretty decent. I think it's a very commendable performance in terms of the trends, given what's going on in the broader market. It's a solid hold. I can definitely get to a hold on this one. I don't have to think about it. Whether I buy it, that's tricky. I'd like to see a little bit more interest. Yep, remember volume is like the volume on your stereo. We want to see a bit more interest to drag people into the party. Right now, people don't even know the party's going on. But yes, it looks solid hold. I think if we closed above this level here, that high is 3.1, so 3.2 and above, then I'm happy to actually upgrade that one to a buy. So thanks for that one. Kevin, this one's from Michael, GMG. Ouch. Okay, again, you couldn't have seen this one coming. It looked great there. In fact, really sort of pushing back off that long-term trend zone. Candles were fine. Price action reasonable. And then I don't know what that was. Maybe we must have got some sort of update there, news item. So I can understand why you might have been in it and why you would have held it. However, this candle here and this candle here and this candle here, they are telling you that supply is professional. It's not mucking around. They mean business. And any of those three candles are fantastic signals to manage your exit. What do we do now? This is where I go back and I try and find any semblance of point of demand, but really it's going to be a tough road back. And if you look at today's candle, it's hardly inspiring, isn't it? In terms of telling us that the market is saying, hey, look, that's cheap. That's the level I was waiting for on G&G. That's where I wanted to see it to buy it. And we're just not getting signs from the market that that's occurring. So it's a pass for me in terms of new money going in. And if I had it, well, geez, I would be ruining not having acted upon a bunch of those sell signals. MGX from Anthony asking if it's holding up. It was holding up past tense and for the last 2 days. Today's candle is encouraging in that it is holding that long-term trend zone. It's holding 60. It's well off its lows. Like to see a bit more volume by the close and a high close. I think there's enough in it to hold it. Again, this one you could not have seen coming. You could argue yesterday's candle was a supply candle. It gapped down a little bit. It closed on the lows. It's all bearish, Carl. But no, for me personally, I would have looked at yesterday's candle, would have been bitterly disappointed, but I would not have said it falls into the category of managing an exit yet. So you're very much having to decide what to do with it. I'd be just watching again. I think it falls into that camp of, this is where the supply started, right, on that day. Why are they so cranky? What do they know we don't know? And that's probably where you'd be making that final decision on hold or sell. It's not a buy, obviously, at this stage. Not enough in it to call it a buy. MineralResources, might as well go for all the lithium-focused stocks today. Is it a good buy here or Wesfarmers? Which one would you go for? Actually, it's not too bad. I mean, to be fair, all things considered, it's actually holding that long-term trend zone. Today's candle is not inspiring. I'd like to see some more white candles come in. Hey, if we saw a bunch of white candles come here, lower shadows, maybe even a close above that short-term trend zone, then I could probably get to a speculative buy on that one. I won't do the fundamentals because we did that, I think, last week. Wouldn't have changed very much. Or Wesfarmers. Now, Wesfarmers not looking anywhere near as robust as MineralResources. Doesn't look as bad as some of the other blue chips that we've seen, but I can't get to a buy on that one. There's just not enough demand in the system to tell me that the probability is skewed towards a continued rise in price. And ultimately, I've talked for a long time today, but really that's all we're trying to ascertain. Do the candles, do the price action, do the trends indicate there's enough demand in the system to indicate prices are more likely to rise in the future than to stagnate or decline? And that's what we have to decide every time we do analysis and every time we think about putting money. Okay. Now, I'm going to stop you there. Please don't put any more in. And I'm going to do my usual rush at the end of the session, 20 seconds a stock, to try and clear this list. So I have checked, let me assure you, I have checked the last one. Jill is the last one. I know where to stop, so don't put any more in. Anthony's got WC8. Not yet. Not a buy. Is it a hold? It's struggling, isn't it? I can't see. Again, the trends are very flat. The candles have gone back to the black side. It looks like it's going to take some time before the interest comes back, or sufficient interest comes back in this to swing that back to the upside. Can I go hold? I'm sorry, I don't think I can get to a hold just yet on this one. Not a buy either. Sorry for that. TNR is the next one. Torian Resources still looks fine. I can't see any reasons to manage your exit. You might argue yesterday's candle is a significant and or sufficient supply signal. I'm going to say based upon today's follow through, no, it's not. I don't think it's anything to be too concerned about. The trends are still good. Definitely a solid hold for me. Would I buy it? Let's see some more white candles first, maybe a close above 3.5 cents. So 1 out of 2 is not bad there. Anthony. Tanya has said hello and is asking for CSL, which is holding up commendably. Something is going on here at CSL that is far too strong in the face of a very terrible market. So I like that. I like these lower candles. I like the fact that it is on a relative strength basis doing so much better than the market. I said on AusBiz, I think I had this on the call a little while ago, if it closed above 280, I would buy it. I would actually be happy to take a little nibble here for your longer term self-managed super fund portfolios. The valuation's fairly reasonable on this one. It's on the right side of fair value, and therefore if you're that kind of investor, a little bit of a nibble here, okay? But it's not an outright buy because we do need to see a little bit more positive price action. Now, we've got WHC Whitehaven, which was looking fantastic yesterday, obviously down today, but powering back. So on the basis of it closing at the highs today, or near those highs, Doug, even a candle similar to the one you're seeing on our last update, it is absolutely a hold. I can't see any reason to manage your exit just yet. But hey, the dip today is something that is putting this on the radar for being super, super attentive. We are at a round number there at $5. And remember what we said, round numbers, sometimes it's just worth just taking a little bit of money off the table on the basis of the round number alone. Thank you for attending. I'll be back next week to answer your portfolio questions at Tuesday at 1 p.m. Sydney time. That's how you register if you are watching on YouTube and you'd like to participate in the live session. This session, Ask the Experts, of course, is being brought to you by Think Markets, who is one of the good guys in terms of Australian stockbroking. We have all the products you need in terms of Australian shares, and through our CFD offering, you can actually go long and short, potentially to take advantage of falling share prices. Great customer service, all the stuff you need on the platform, and of course, my analysis. We do have a 10 free trade offer going at the moment, but if you mention that you saw me and Ask the Experts, we will double that to 20 free trades. Terms and conditions to apply. Head to the website for details. And of course, we do have a refer a friend offer. And if you've still got a bunch of friends trading with their banks, paying $20 a trade, that's crazy. Send them over to us and you'll both benefit. If you're watching me on YouTube, please hit the subscribe button or the bell icon to stay notified of upcoming videos and analysis. And of course, smash that like button to let us know what you're doing so we will keep doing it. Apart from that, it has been an absolute pleasure picking through the pieces of your portfolios for the last hour. All the best if you're investing until we catch up again. Bye-bye for now.